Good day and welcome to SCO BRICS Insight, where we talk about what's really going on in the world of the BRICS. Now today I want to talk about Donald Trump and his recent remarks threatening Russia as if it was one of his little lapdog vassals of the G7 or maybe a member of the EU. Now, the recently inaugurated US president made a speech in which he stated that the Russian economy was in serious difficulties and he could make the situation worse if Russia did not agree to his terms for peace in Ukraine. Now, I don't know where he gets his information on Russia from, but certainly not from listening to me or watching this channel, or he would know he's talking complete shite. Or maybe even he's not reading the IMF and World Bank reports which detail that the Russian economies grew more than any in the G7, and that includes any in the EU and the US. Plus, Russia continues to run a major trade and current account surplus. Now let's look into how Donald has actually got it completely wrong. Well, let me tell you about what's really going on when it comes to Russia. Now, the Bank of Russia has published the Russian Federation's balance of payments data for December and its estimate for the previous year of 2024. Now, the main indicators rose slightly compared to 2023, but they were slightly weaker than expected. Nevertheless, the positive current account and trade balances indicate that Western sanctions have not had a fundamental impact on Russia's foreign trade operations, and the inflow of foreign currency into the country outweighs the outflow. Now, these processes will continue to support the ruble exchange rate. Now, before I continue, I'd like to make an appeal. If you like and enjoy my videos, you can help me fund the channel and my website, SCOBRICSinsight.com, to further develop it. You can do this by making a small donation, which you can do by clicking on the thanks button at the bottom of the screen, and everybody who donates does get a personal thank you from me. So, according to the results of 2024, the current account surplus will increase to $53.8 billion, and that's up from $50.1 billion in 2023, which the Bank of Russia explains by a decrease in the deficit in the balance of primary and secondary incomes, with a decrease in the positive balance of trade in goods and services. According to the baseline scenario of the main directions of the single monetary policy for 2025 and the period 26-27, the indicator should have been $61 billion in 2024, and it should have decreased to $51 billion in 2025, $43 billion in 2026, and $31 billion in 2027. Nikita Kulagin, who's head of macroeconomic analysis at Sovcombank, said according to his forecast, the current account and trade balance in 2025 will be actually about the same as in 2024. Now, the most interesting data is those on export and imports, which can be concluded that the new anti-Russian sanctions have had a very, almost minimal and weak impact on Russia's foreign trade. Russia's exports in 2024 amounted to $417.2 billion compared to $424.5 billion in 2023. Its imports were $294.5 compared to $302.9 billion. So the trade balance for 2024 as a whole increased by $1 billion to $122.6, the central bank reports. At the same time, the main indicators worsened slightly both the previous month and December 2023. For example, the current account balance was negative by $1.3 billion in the final month of the year. In November 2024, the balance was plus $2.1 billion, and in December 2023, it was plus $0.6 billion. Now, the main reason for this was a seasonal increase in the deficit in the balance of investment income and the balance of services, with the weakening trade balance, according to the Bank of Russia. In particular, in December 20 to 24, the deficit in service balances increased to $4 billion, and November it's $2.5 billion as a result of seasonal increase in imports of other services and spending by Russians on trips abroad. The total deficit in the primary and secondary income account was $2.9 billion. In November it was $1.4 billion. That's due to a seasonal increase in dividends paid by Russian companies to non-residents. Now, it should be noted that the domestic issuers received their shares dividends on the shares, but non-residents can't actually receive them foreignly, but they're held in a special account for them. So therefore, the payment of dividends doesn't actually put any pressure on the ruble exchange rate as they're not leaving the country. Now, the decline in the current account in December compared to November so is no cause for concern. Now, what is more important are not the figures from the balance of payments, but the actual inflows and outflows of currency, which can be delayed or conversely significantly ahead of the actual transaction marks in the balance of payments, according to Kalugin. Now, as a rule, the Bank of Russia publishes these figures and data with a delay of 1 to 2 months, and according to Ilya Fedorov, who's the chief economist at Broker World of Investments, he said monthly estimates of the main aggregates of the balance of payments are usually significantly adjusted after 2 or 3 months, and according to him, the negative current account balance in 2024 was due to a stronger decline in imports. Russians importing less stuff. In December 2023, the current account surplus was minimal against the backdrop of a growth in seasonal imports, which didn't come this December. At the same time, exports in December 2023 were a quarter stronger than last year. Export receipts are under pressure from both subdued export volumes and deteriorating terms of trade, lower world oil prices and higher import costs. So maybe after the data revisions, the battles will be narrower due to a reassessment of the export volumes, according to Boris Kolepkin, who's chief economist at the Stolupin Institute for Economics. I think the balance of payments figures were generally positive, and at the same time he drew attention to the reduction in the value of exports in November to December 2024, which brought a noticeable decrease in the trade surplus in the fourth quarter to around $20 billion, compared with more than $31 billion for the same period in 2023. Now, although the situation with external restrictions on Russian exports may develop rapidly in the near future and negatively affect export revenues, the ruble has already weakened noticeably in the fourth quarter, and this factor, together with the increase in car recycling levy and the rise in customs duties on a number of import categories, will begin to affect the dynamics of supplies from abroad, and this will help maintain a noticeable trade surplus, which in turn will support the ruble currency exchange rate. The Bank of Russia also reported that the external debt of Russia for 2024 has decreased by 8.7% and will amount to $294 billion as of January 1st, 2025. Yeah, Russia's whole foreign debt is $290.4 billion. Not a lot, is it? Now, the dynamics of this indicator was determined by a decrease in debt on the government securities denominated not only in national but foreign currencies, as well as a decrease in the liabilities of other sectors in loans and borrowings, including within the framework of the direct investment there. Now, just let's look for a minute, as I finish this off, at trade between Russia and China, which increased by more than 7% in the first 11 months of 2024, and it was exceed over $220 billion. That was according to Vladimir Putin in a conversation he had with Xi Jinping when they were looking at the results of the year. And despite all the negative influences, etc., Russia and China continue to trade, and it only grows. I mean, if you look at the data for the whole year, it's more than $220 billion. And China is now the main trading partner of Russia, while Russia's up to 5th in the list of countries or trading partners of China. Now, in particular, Russia is the leading exporter to China of oil and gas. According to the Customs Service of China, trade turnover for the whole of 2024 will amount to $245 billion, which is up 3%. Now, what are they sending? Well, Russia's imports to China remained almost unchanged at $129.32 billion. At the same time, China's exports to Russia increased by 4.1% to $115.49 billion. So the situation in Russia is very different, and as usual, Trump gets it wrong. This is mainly due to him surrounding himself with idiots who live in a bubble, not the real war, and they seem to think it's still the Cold War of the last century, and Russia is the Soviet Union. So as you've heard, things are very different. Thanks for watching. Please like, share and subscribe. And if you want to help me out, click on the thanks button at the bottom of the screen and make a donation. And I'll see you all again soon. Thank you.